From time to time, you hear Steve Peasley talking about portfolio checkups in locations in the San Francisco Bay Area, Los Angeles, and Orange County, and that kind of leaves you out if you live in Orange County, Florida. Well, don't feel left out. If you would like to take Steve up on his offer to look over your portfolio and give you a health scan, it can be done on the phone. You can send copies of your documents by fax, email, or regular mail and join Steve for a one-on-one conference call. If you're interested, just go to investtalk.com or call our 24-hour InvestTalk answer line at 888-99-CHART. That's 888-992-4278. And thanks for listening to Invest Talk. Welcome to our one-hour meeting of the minds about money, your money. This is Invest Talk, made possible today and every day by KPP Financial. It's about managing risk while looking for profits, putting the money you worked for to work for you. And now, here's registered investment advisor Steve Peasley.
Good afternoon, everybody, and this is the Friday edition of Invest Talk, January 9th. January 9th. Boy, January's flying by, is it not? Here we are in 2009. We always welcome our new radio listeners as well as our podcast subscribers, and to those of you listening on investtalk.com. I always want to thank you for making time for our show. We're hopeful that it'll be well worth your time, but no one really knows. Only you can make that judgment, not me. Our mission on this program each day is to help you make better investing decisions if we can, moving you closer to that goal of financial independence. It is nice to be financially independent. We really want to do that. That means getting out of debt, by the way. That means getting out of mortgage debt, too, doesn't it? Now, we've all suffered setbacks for last year, recently, 2008. If you haven't, you are so count your blessings, because there was no asset class that didn't suffer last year. People are raising their retirement age. Well, because what I've heard someone say not too long ago is my 401k is now looking more like a 201k. So I thought that was pretty funny. But we must look forward, not backwards. If you keep looking in the rearview mirror, you're not going to make any money. You'll be too scared. Now, how can we use the forces that move the market down? How can we use them to make money going forward? Because really, we've got to look at 2009. What's going to happen in 2009? That is the key. Are we going to come out of this slump at some time? Is all that money Obama's going to spend, or the new Obama presidency, is all that money going to work? Is all that money being spent by the Treasury and Bernanke, is that working? The evidence so far is that it is starting to loosen up the money, not making everything wonderful or like it was, and it shouldn't be like it was, by the way. But for 2008, leverage has been severely unwound. What is leverage? Nothing but borrowed money. That's all it is. Hedge funds, everybody in the world, banks were highly leveraged. That's why Lehman Brothers went out of business. That's why Bear Stearns is gone now. That's why a lot of those big, huge banks either went out of business or were purchased by somebody else, because they got drunk on leveraged, on borrowed money. And when things started to go south, property values, other stock assets, that borrowed money had to be repaid, and they did not have it. They lost it. That has ended, by the way. That unwinding is almost done. Not completely. We're never going to unwind it completely. But there was massive sell-offs of assets last year to give back borrowed money as fast, as furious as possible. That's what happened. That's why the market collapsed. That's why everything froze. But now it's unthawing slowly. But there are opportunities. Now, we're going to go over this in our Saturday Morning Wealth Conference in Berkeley, at the Berkeley Marina this month. I urge you to mark your calendars. It's January 24th. January 24th. That's a Saturday morning, 9 to 12. I hope you can join me at the Berkeley Marina. We're going to give you a free breakfast. We're going to give you all kinds of handouts. I'm going to go over what's going on, what happened, what should happen going forward, why should it. Now, it doesn't have to, but I'll also give you a list of possible stock ideas for you to take a look at. Now, we do this almost every conference, and we're only going to do 6 this year. We're going to have 6 this year, one every other month. That means we're only going to be up in the Bay Area probably 3 times this year. So if you miss this conference, you won't see me back there for 2 more months or so. Just a heads up for you. Now, each day we deal with the realities of managing our money, my own money. I manage my own money right alongside my clients. I buy the same things for me at the same price, same percentages as I do for the clients, my clients. Now, yesterday we talked about the recession and what it means to investors. What are the cycles? You got the economic cycle and the stock market cycle. How are they attached? Today, we move to a topic that is worth talking about for everyone out there, even if you're not in the stock market, and that's living trust. We're going to talk about living trust. I know you've heard about it. You know you're supposed to have one. Someone tells you you're supposed to have one. But do you have one? Should you have one? We're going to answer those questions. We're going to shed some light on them and help you decide how important to have one may be for you. Because you don't need it necessarily. You don't. Everybody thinks you should have one, but not necessarily. So we're going to talk about when do you decide when you should have one. Okay? Living trust can be a valuable estate planning tool. Okay? It can be very valuable, especially if you have a decent sized estate. But they're oversold to people. People are being talked into them, and they're not necessary. So, if you have questions about living trust, let's get you in on the conversation this afternoon. I am not an expert on living trust. I just redid mine, 6 months ago or so. Be happy to talk to you about them. Remember, they're very different than wills. They're very different than durable power of attorneys. What are those things? Well, those are other good questions. The lines are open now. You can get queued up, and we'll get to the phones in just a minute. First, I want to talk about the market and what happened. This week, market was up and down with a downward bent to it, I would think. I would say we had a downward bent to the market for the week. That's after 4 or 5 days in a row that it was up. Let's see. So if we go, that's 5 days. We go to, let's see. See how many, let's take a look at the 5-day period here. Yeah, definitely. The market actually was up. I would say we have a definite downward bent for the week. It just seems like it was about downward bent, and I think that was. After being up nicely from December 29th to about the 6th, and here it is now, today is the 9th. Yeah, the last 3 days have been pretty tough. So kind of a downward bent to the week, but just okay. Today the market kind of sold off. It held up quite well. It wasn't a tremendous sell-off. Most of the day it just held in there down. The Dow ended up down 145. It was down about 100 most of the day. And toward the end of the day, it kind of sold off a little bit more. Weekend's coming up. What is coming up next week, the week after, is earnings season. Earnings, remember, this is the last quarter of the year. Earnings are not...